Okay, hello everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Mike Boutros here with you this morning, guys. Great to be here. 8:31. We just got the release of the trade balance data from the United States as well as the ADP employment change. A little bit weaker than expected. We were looking for a print of 215,000, came in right at 185, a slight downward revision to the previous month as well. We don't want to put too much emphasis on this, guys, on the account of broader studies that we've done on ADP and NFPs have shown that ADP is actually notorious for missing larger swings in the NFP print, meaning they will broadly move together, but on a spike high or a spike low in NFP typically is not reflected in the ADP numbers and will mask those deviations. So we'll keep that in mind, but slightly weaker than expected here. Trade balance data pretty much in line with expectations, a little bit bigger of a deficit than expected. So there's a lot to talk about. We're just starting off August trade. There's obviously a lot of interesting setups that are kind of in play at this point. As far as current positioning, we just got taken out for the rest of that dollar yen position. We'll go over that. Also, the Aussie dollar from last night's scalp report got panned out. I got stopped out right at the low tick. I'll show you that one as well, but still looks pretty good for a possible upside move here. So before we get started, a relative performance check here on the dollar does show the dollar weaker against all its major counterparts today so far. Biggest winner is the British pound with a gain of 0.48%. Kiwi and euro with about a quarter percentage gain each. And a little bit lackluster there on the CAD yen and Aussie. Looking for data for the rest of the session. You're looking for those composite PMI numbers at 9:45, which could offer some further volatility. Keep in mind, this is the first read, or is it the final read or the first read? This is the final read, for July. So this is just on a revision basis. As long as there's no revision, unlikely to see any major market volatility on those releases. Heading deeper into the week for the Aussie crosses, obviously the employment figures out of Australia will be huge. We'll also be looking for the non-farm payroll print on Friday, which will be the biggest market mover for dollar crosses. But heading into that release, we are coming in some very nice opening ranges. So let's just jump right in. Okay, so looking at the dollar index. Here's the 30-minute dollar index first, but before we jump into the 30-minute, I just want to show you yesterday's radar chart. And the dollar index range, or the key levels for the dollar index that we've been watching, hasn't changed in literally, guys, almost 3 weeks. It's been very frustrating for us here, but the market's going to do what the market's going to do. The key levels we need to keep in mind are 11,980 into 985 specifically. On the upside, 12,037. We've been probing through that on a daily basis, but have been unable to close above or below this key threshold. You're basically looking at the June highs, which constitutes a 764 retracement off of the yearly high, and the basic 236, which now comes in line right with that median line off the lows from April. So this is still the range in view. As we open up the month, this is still what we need to see break. And here's what the dollar index looks like on the daily, still holding that same exact range. So we'll look for some clarity on this. I see, hey, Mark, great to see you, man. It says, morning, Michael, dollar yen is still in play. It is. From the swing side of things, it is. On the scalp, I'm already out. I'll show you that in a moment. But he says, Jamie tweeted. All right. Did he tweet something specific, Mark? Or oh, the dollar index chart. Yeah. Okay. So Jamie's looking at this, and something I've obviously been looking at for a while too, guys. The fact that, and I noted it in yesterday's report, the momentum has yet to break above 60 with a pending support trigger in play. Okay. This has been the name of the game for almost the majority of July trade. And remember, for those of you who might be new to the room, we talk about these nuances that you see in these oscillators that are broadly overlooked. And in very strong uptrends, you like to see support at 40. In very strong downtrends, or in downtrends in general, you like to see resistance at 60. And that's exactly what we've been getting on the index since the low that we put in here in May. So the possibility for a breakdown is there to set up the month as we open up August trade. This is the game plan. You see a downside close below 11,980, 11,985 with a momentum break of the trigger. And that would suggest a little bit more of a correctionary play here for the dollar index, looking for 11,937, and more key support down here at 11,886, 11,888. If we close above, the levels are extremely clear. You have the 2015 reversal day close, okay, which came in right here on the 14th. That comes in at 1271. And then you have the high day close, which also comes in right in line with a 1618 extension off the low, and that's at 12125. So the levels are mapped out on both sides. It's very clear from the dollar index what would constitute action on our side, either a 60 break in momentum and a close above this region, or a trigger break in momentum and a close below this region. In the meantime, for me, at least from the scalp side of things, guys, we're very nimble. We're in, we're out, we're taking a quarter of the ATR, and that's the name of the game. Until we get the breakout in the dollar, a little bit more clarity on the directional move here moving forward into the start of August trade, you want to stay nimble on your feet here, especially heading into the non-farm payroll report this Friday. As it pertains to that report, I don't want to stress it too much. The only thing I'll say is this, of the dual mandate that the Fed is charged with, fostering maximum employment and price stability, i.e. inflation is the laggard. And I've said this here a million times. I don't want to bore you guys again with the same conversation, but with that in mind, unless you see a pretty strong deviation in NFPs, meaning, a robust 250, 230 plus print, or, a sub 150 print, which would suggest that we're kind of falling off a cliff there on the employment side, I really don't expect that we'll see too much market volatility. Okay, an inline print pretty much says status quo for the Fed. They're looking for the inflation numbers to pick up. They're looking for specifically wage pressures to start lifting. And if we do see that, that's when you'll see those interest rate expectations start to move in, and that would help the dollar. That being said, outside of a deviation on Friday, not really too confident that you'll get so much volatility off that NFP print. Okay. All right. Mark says, I think is this the tweet from Jamie that you're quoting? He says, cancel 124.13 limit in dollar yen trade. The analog might work out after all. And he's got a nice tweet there. Okay, so he just gave you guys a quick update on the dollar yen. And the dollar yen still looks pretty good. 124.35, 124.20 is such a big region of resistance. We were short from there since yesterday. And we'll take a look at that trade in a second, Mark. Let me just jump through real quick on the Aussie. And also, well, let's just do this real quick. So here's a 30-minute for the dollar index. We highlighted this yesterday. This is sort of the breakout zone that I was looking for. If this formation were to hold true, we surged right through it and ducked right back below it. That's what this spike is right here. And here's the 30-minute looks like on that same scalp. So didn't hold too long above there, okay? We didn't even spend a full session as you head right into the open of Europe. This thing collapsed right through again. So invalidate that, still looking lower, broadly looking within the confines of this formation. You came right into a former median line here and saw a rebound. The key support is still going to be 980, 985. And again, that's this region right here. So no change as far as the dollar index levels from yesterday's radar charts. And certainly while below 1237, especially with the momentum indicator doing what it's doing, you're at risk for some further dollar weakness here. Any questions on the index before we move on? Again, for those of you who can't trade this stateside, it's just a very nice, useful tool to help ascertain broader dollar-based movements. At its inception, equally weighted index for the euro, Aussie, sterling, and yen. All right. The other chart that was on the radar yesterday here was Aussie key. I do want to go over the Aussie dollar real quick, but the only thing I wanted to highlight here, guys, is this major key resistance. Again, for those of you who've been following the scalps, we've been all over Aussie key for like 3 weeks now. And certainly to start off the month, you're coming right back into a very nice, interesting area of resistance yet again. So I bring your attention to the 2014 high day close that came in right here in November, late November. You caught the rally here back in June, a break. Every single pass through has been a sizable day move. Other than that, there's been nice pivots. And it also coincides with basic trendline resistance off the highs at this point. You're looking at 112.80, 112.90 here as resistance for Aussie key. Momentum coming into 16 holding. You actually got the close yesterday from a momentum trigger break, but remember, these mean nothing if it's not coincided with a break in price. So price is at resistance. You did get the trigger break, non-operable at this point. So the risk heading into the start of the week is to the downside below this region of resistance. Here's what the intraday chart looks like for Aussie Key. Slight adjustment to some of the levels that you saw on last week's scalp, but not much. Here's the invalidation level, or again, here's the resistance region we were looking for. Possible median line formation off of last week's low, and then again that 2014 high day close. It also is a 786 retracement off the high. You saw us spend some time up there, and here we are gradually moving lower. A break below 112.30 for me is what would shift the near-term focus back to the downside. In such a scenario, you're just looking for a move into the lower median line parallel. So initial targets would be right at 111.90. This pivot here is the same pivot that you're looking at in the daily charts, and these are slope lines we've been following for multi-year at this point. This is off the low from early 2014. If you mirror that slope, it was the same as the highs. Nice pivots here in early 2015, the low that we made for the year, and even on the extensions here, catching some really nice turns in price. Okay, so that takes you down into like 111.60 near term. You're looking for a break below 112.30, and that would be the onset of a near-term correction here for the Aussie Key. So again, you're not going to actually get the break. If it does break, you look to sell rallies into that median line, into 111.90, and then 111.60, like I said, right around that region will depend on time, is where the lower median line parallel comes in. So haven't taken any positions just yet on Aussie Key. I'll show you the Aussie position that we took last night, but this is kind of the game plan I'm looking for moving into the start of the week. The best play on this was this break here. Objectively, it was a break of last week's high. The opening range for the week, 111.35 was a 50% retracement. Took you through the median line, and this was sort of the onset for the long bias. Okay, now that bias, like I said, near term is at resistance, and you want to be cautious of long exposure in Aussie Kiwi below that region. Any questions on Aussie Key before we move on? Let's cross that one off. Chintan, I see your question. Let me get through the Aussie, man, and we'll definitely jump into Sterling Oz. I know that's a popular pair these days. Not really my favorite to scalp at these highs, but we'll take a look at it for sure. Okay, let's do Aussie. We'll jump into the dollar yen, and then we'll go into your questions, guys. Feel free to throw out any questions, trade setups you guys are looking at, strategy questions. You're in the right place. Feel free to throw out any questions on the message board. Here's what Aussie dollar looks like on the daily. And here's what we were looking at yesterday. So not much has changed. You did get a small pullback in overnight trade. Like I said, I got stopped out at the low tick. It was really, really frustrating, but the game plan still remains, okay? You're in the confines of this descending pitchfork median line formation, whatever you want to call it, from the April-May highs. It's been very, very neat. Yesterday's rally coming right into resistance, tagging it and holding it. You've already seen a multi-month trigger break in momentum, which shifts the bias from a momentum standpoint to the upside. Price is at resistance. Okay, so here's what the scalp looked like last night. There was the upper median line parallel, a formation off of last week's low. Okay, shifted or keeps the bias to the upside while above the median line. In overnight trade, you did get a small pullback here into this region. This is where we established the longs right against what was that, 73.40. I think the low was like 36 or something. And that was enough to get me stopped out, but we're seeing a nice rebound off of this region. We still need to clear that median line, guys, the upper median line parallel, to really get the conviction for a more broader or a more significant reversal play here in Aussie dollar. Until that breaks, you have to be nimble and accept the fact that you're still into resistance, and it's still early in the week, early in the month, so we're going to want to keep that into mind. But a topside break here, we'll look for 74.68, 75.40, and this is a nice confluence region here for some highs as well as 50% retracement from the decline. So here's what the scalp looks like right now for the Aussie. Okay, you got that pullback in overnight trade. Again, momentum looked like it was holding 40. Here's what the Aussie looked like from the 5-minute chart from last night's trade. And you know, it might have been a little bit early on the pull for the trigger here. You saw some slight divergence in momentum when the stop was just against that region. So again, the low came in at 35, 34 and change. We literally just got stopped out right on that low spread right there. And here's the rebound. I still like it. I still like it. Resistance at this point, this was the target, is still just above 73.90, just below 74, that median line. And this is still the breakout zone that we need to get the conviction to continue favoring the top side for the Aussie. From a momentum standpoint, some things are changing, okay, that we want to take note of, okay? You know, this is the highest level into overbought reading that you've seen on an intraday basis since June. Intraday, okay? It's the highest reading in momentum, which is constructive. Maybe not in an intraday play. You don't want to try shorting up here necessarily until this breaks the 70. But again, support at 40, multiple breaks above 60, multiple breaks above 70, keeps the broader momentum focus to the upside. Other than that, if we go back to the daily chart, and specifically if you bring this into a weekly close, okay, you can see that this rally that we made just yesterday was the first time that we cleared the previous week's highs also since June. Meaning every week we've pushed into a high. The next week we've respected the previous week's high and pushed lower. Following week, respect the previous week's high, push lower, and so forth. This is the first time we've actually cleared a previous weekly high, as momentum is giving us the momentum break, and all those things are happening intraday. Again, these are all evidence, right? All factors to suggest that we are at risk for an Aussie breakout to the upside near term if we finally clear this trendline resistance. So that's sort of the premise of that trade setup. Again, the intraday trade or the intraday levels still remain right on. A topside break above this. You look for the median line parallel. That's going to be determinant on time, guys. So you're basically looking at like 74.40 in early US trade. And then 74.68, 74.74 is going to be a little bit bigger, more significant of resistance region. All right. So yesterday's report, you had the bullish invalidation level right here at 73.65. We'll continue to favor that. Nothing's changed. As long as we hold above that median line, we'll continue to look higher in Aussie dollar. Any questions on the Aussie before we move on? For those of you who are new to the sessions, guys, always feel free to take a snapshot of any of the charts that you see presented on the webinars. Top right-hand corner of your GoToWebinar screen, you'll see a picture of a camera. If you click on that, you'll go ahead and take a freeze frame of any of the charts that we're going over here throughout the session. All right, so moving right along, that is the Aussie dollar. Last but not least, the things that I've been operating in, dollar yen. I just want to touch on that real quick. I know that the swing trades are still holding a position on this as well. Look, from an intraday level, from an intraday structure, these can change, okay? From a daily chart, the levels are the levels, okay? And for me, we've gone over this, you know, multiple times last week, guys, in the webinars and in the previous weeks for July trade, highlighting 124.13 into 124.35 is the real critical level that dollar yen needs to clear. It was the swing high as it came into the end of June. It was the highs for July. Probed through it here in late July, closed well below, and here we are yet again. Okay. Support, well, that's pretty simple. You got the lower median line parallel from the lows of the year, and a sliding parallel off that same low from May, which has also offered some nice support here on the pullbacks. So basically, we're looking to clear this region. Before we can make any major assumptions on what the next major move is for dollar yen, you're either looking for a push and a close through 124.35, or you're looking for a breakdown below that sliding parallel that basically takes you into like 23.70. And that's the range you play until we break out, period, if you're looking to play this intraday. Okay, here's the dollar yen on the 30-minute. And here's what it looked like to open up the week. So here was a upper median line parallel for a formation off of the last couple of weeks highs. Okay, You saw that break yesterday. We came right into, you called it, 124.35, and this is where we initiated the shorts from the scalping standpoint here on dollar yen. Okay, right into that region of resistance. The stop, pretty simple, right against the previous week's high. Okay, ATR has contracted in overnight. You were looking at basically 21 pips, I think, was the quarterly ATR yesterday. So we're only looking for about 21 pips on the downside. Didn't really get it into the open of Asia trade. Again, almost got stopped out here, pretty comfortable as far as where that stop was. And then the turnaround came right back. A simple 618 retracement. Whoops, wrong chart. A simple 618 retracement just off the rally, okay, off the lows here. Gave us a target right around 123, or 50%, excuse me, right around 124 handle. Nice pivot. And we put our limit right ahead of that. Okay, we took off half the trade. We came back on the rebound. The rest of it was just ahead of break even, so we locked in like 10 pips on the rest of the trade. And we'll look to reinitiate this as long as 124.35, 124.13 holds as resistance. So heading into US trade, I'll be looking for support triggers again. Even on the rally and overnight trade, you can see momentum filling at 60. Here's the 40 break into oversold. You know, that's a shift in behavior. And we'll look to sell rallies here in dollar yen while below that region still. All right, so not a bad play so far. And with the dollar trading lower against most of its major counterparts, still might give us some play here as we hold key resistance into 24.30. All right. Raj says, LOL, swing side is going crazy. We just can't seem to catch a rally. Yeah, I mean, listen, we came off of really hard trading conditions last month. It wasn't the clearest month. And again, we went over, guys, you know, when the market's doing something like this, doesn't matter what your strategy is. You know, the market's going to provide what the market's going to provide. We're only looking to take snippets of it, right? I want to take a piece here. I want to take a piece here. If it's not panning through, if we're getting stuck in these ranges, then those are the conditions we have to contend with until such time where, you know, the directional bias become a little bit more clear. From a swing side of things, Raj, you have to also keep in mind that you're working with a much better risk to reward than we're working with here on the intraday. So if we take 1, 2, 3, 20 pip losses, 30 pip stops, it's not a big deal because the gains are much, much wider than your average loss. Where when we're intraday trading, you know, we're almost working with a 1-to-1. I'm always going to encourage to maximize that as much as you can, but you know, at best or at worst, you're working with a 1-to-1. So actually, these horrid trading conditions, Mark says, are a prelude to big moves. Hopefully, we catch those 100%. And that's something interesting, guys. When you watch CNBC or when you watch Bloomberg or Reuters, and they're talking about the fact that the VIX is, you know, continuing to come off, or we're at these lows, you know, time periods right ahead of major market volatility, typically you see the VIX contract. And periods of low volatility are typically followed by periods of really large volatility. So it'll come back, guys. It'll come back, and we'll get a lot more plays. And I'm sure, you know, you have to keep in mind that there's so much that the market is trying to digest right now. There's Fed timing. There's concerns over what's going on in China. There's the European central bank, which is just starting its easing as the Fed is talking about normalizing. You got the BOE, which in my opinion is going to be very interesting this week. If the BOE comes out a little bit more hawkish, as we expect them to, if we do see the quarterly inflation report also show that inflation is starting to pick up in the UK, man, I'm going to stand next to my statement. I still think that the BOE is next to the Fed, best poised to begin normalization on policy. All right, so keep that in mind. That was for Raj, right? As far as the rallies. All right, so those are the setups that we've been looking at. Again, dollar yen is still going to be something I'm very interested in to start off the week. Keep in mind that the dollar yen typically is a very good barometer, or I want to say will tend to react very strongly to U.S. data. So as we get into the latter part of the week, specifically with non-farm payrolls, the correlation with yields, we'll want to take a look definitely at the dollar yen positioning at that point. I don't want to stress this formation any longer at this point now that we've broken the lows, but I do want to leave that there near term. We're going to look to see if that resistance holds. Like I said, heading into the US trade session, we're going to see if we get any more triggers on the short side if this thing rallies back towards 124.35. On a break, and specifically if we close above this, sayonara. Look for the median line. This will take you somewhere into 25.25, 25.20, and the major key resistance, obviously, at those highs and the measured run into 125.70. All right, so that's the Aussie dollar yen, Aussie Kiwi we went over. We want to touch base on the euro, some of the com blocks. But before we do, I want to jump into some of your questions here. You guys are looking at some interesting pairs. So, Mark, I got you. Chintan, Sterling Oz at the support turn, resistance near 1230. Would you like the idea of getting short near this level with a 30-minute momentum trigger? Good question. This is what I'll tell you. I actually did like price action in this pair yesterday a lot. So 2015 high day close, it's not actually the high day close anymore. It's basically the July high day close that we made here on the 20th. We've obviously blown through that, so I don't want to stress that level any longer. More so, I'll just stress the upper median line parallel here, which is offered as a nice pivot in price. That comes in line with a basic channel support off the lows there. And I'd be looking for a break below this region and a push and a close below to start selling rallies on this, Chintan. I think you're trying to call this one a little too early. Look, when the market has, well, let me take a step back on this, Chintan. I like where your head's at. There's a couple of different things that would suggest, sure, yeah, to open up August trade, the risk is to the downside for Sterling Oz. A, you're seeing the Aussie test a breakout. Aussie strength should push Sterling Aussie down. Cool. B, you do have the UK interest rate decision, okay, and the quarterly inflation report, two major releases for the sterling. Something I also want to keep in mind. And C, on an extended rally of this magnitude, I don't want to necessarily just start jumping on shorts after one day of pullback. You're seeing the rebound already find support where you would expect to find support. And as such, you really want to be cautious, okay? Because on every down day after this rally, you could have tried that and it wouldn't have worked. This would have been a day where you might have been able to squeeze a couple of short scalps and then it broke right through. This would have been a day, again, really tough to even try shorting that, but didn't last very long before you broke through, and so forth. True, this is the deepest correction that we've seen in a while, but you're still at support, and I'd want to see us close below that basic, just trendline support off of the May low. Here's what it looks like on the intraday. I don't have intraday levels on this. Again, I tend not to scalp trades that are in extreme territory, meaning, fresh multi-year highs or lows. Well, one of the major things that we like to do when we're scalping is use previous price action to help us ascertain what the scalp levels should be. And when you're at these major extremes, you don't really have anything pertinent near term to lean on as far as your levels. So I'm not a big fan of scalping this right now, but let's just take a quick look at what we're looking at here. Chintan says, "Thanks for the words, Mike. You saved me getting on board before the BOE." I mean, look, typically, Chintan, to be quite frank with you, I'm not really a big guy who's like scared of the BOE. The BOE, just to be clear with you guys, if there's no change in policy, they don't even offer a policy statement. Whereas the Fed, every single interest rate decision, they will have a policy statement. So you know what the outlook is, you know what the broader theme is that they're talking about. With the BOE, unless there's a change in policy, they don't even release one. It just so happens that we've been getting some rhetoric. The data has been starting to pick up, and if we even if we don't get a release of a statement, Chintan, I'll be looking at the count. It's been unanimous to hold rates till now. Okay, if you start to see that unanimity, you know what I'm trying to say, that unanimous vote, if you start to see that unanimous vote start to break up, and you see some dissent with some members, wanting to move on interest rates, that would suggest that they are starting to lean more towards normalization, and that would put them right in the same park as the Fed. So that's why this one holds a good um, chance that we could see some volatility. And the fact that it's Super Thursday, the fact that we're also getting that release on the same day that we're getting the quarterly inflation report, you just might want to stand pat on any of these sterling crosses until we get into that release. Okay, and again, that's all tomorrow morning, guys. 7 a.m. Eastern is when you get that BOE interest rate decision. Ahead of that at 4:30, you do also get manufacturing production and industrial production numbers too. So it's going to be a big day for the pound tomorrow. I'm willing to sit this one out. On its face value, again, similar to what we were looking at in the Aussie, you took out last week's low, and now looks like you're testing a nice median line confluence. You'd need to really sub on this one below this region here. And the targets would be huge. I mean, if this does break, I really don't have much on tap until right back at those median lines. You're basically looking like for a move into 205, 206, 205.60. Remember, a larger ATR on this pair, a daily ATR of 246 pips. So I think we'll get clarity on this one, Raj. Just need to be a little bit more patient until we get through some of this event risk. Mike, at the moment, what is the dollar index doing? I am long sterling. I think it will break the triple top on the hourly chart. So let's take a look at the British pound. We're putting in an interesting day today so far. It's already an outside day. Whether it's a reversal or not, we'll have to see on the close, obviously. But basic trendline support off last month's low. You saw a quick probe below that and a quick reversal. Here we are testing the initial monthly opening range high. We're only the third day into the month, but nonetheless, here we are. And momentum showing a reversal pivot right off 50. So it could. All I want to tell you, Raj, is this. My style of trading, if we're talking about the intraday, I can't make any assumptions or ascertain whether it's going to break a resistance before we head there. So Raj, I get a little concerned when people are in a range position and they start saying, I'm holding this position hoping that we're going to break resistance. I don't know it's going to break resistance. You don't know it's going to break resistance, but we know where resistance is, right? So from an intraday strategy type of standpoint, I'd be looking to take some profit here as we head into this region. I would definitely have my stops at break even or better. And if you want to play the breakthrough like that, I'm all down for that. That's cool. Because you've already taken some off the table, you've got that profit in your pocket, you've already made the right call in the rally for the intraday, and now you want to hold on to a small piece of that position, trying to play the breakout with a stop at break even. I got no problems with that. Trying to ride your winners is the best way. Okay, the biggest mistake that you see retail traders make is that they're very quick to pull profits and very slow to cut losses. So I'm all about riding the winners, but we want to make sure that when we're coming into resistance, our stops are at break even, because I don't know if that resistance is going to break. And there's no reason for me to hold a trade with a stop in the loss when we're at resistance and we're in the money. So that's just my mentality as a short-term trader. We want to make sure we're keeping that in focus when we're intraday trading. So watch 156.80 basically into 157. That's going to be the major resistance you need to clear. A 618 extension off the low takes you right into that region. You also have a 618 retracement off the high into that region, and for the last 3 weeks has also been the stretch highs. So just as dollar yen has a very well-defined structure, well-defined range to open the month, so does sterling. And that's basically 157 into these lows that we tested last night, basically 155.60. And that's the level we need to clear for sterling. All right, here's what it looks like on the 30-minute chart. So it's been a little bit of a chop fest, I hear you. And this might look like a really messy chart, guys. Let me just break it down for you real quick. So we were looking at this structure last week, if you guys remember, as we came into resistance, ducked right through into the close of July. Last week we broke out, okay, and we came into that major resistance at 56.80, 57, as we just noted, okay, which is the 618 retracement. That failed. It came right back into basic support and it held. So at this point, I'm going to go ahead and kill this median line formation. This is the one we were working with to start off this week, okay? And here you are, again, 55.50, 55.60, what we just noted as major or near-term basic trend line, support. Boom, quick dip below. Momentum broadly holds 40, and here we are right back at resistance again. So I don't know. I don't have any concrete bias here for the sterling. I haven't played any sterling crosses as of late. If we do plow through this, and in fact, if you add a sliding parallel, it's probably the same exact slope. Or similar enough. If you plow through that, you look for last week's highs, you look for 157, and that's going to be the key resistance that you need to get through, Raj. You had a really nice trigger on this in overnight trade. You had a couple of triggers on the long side. So, Raj, I like the long position that you're in right now. I would just say coming into resistance, you want to start maybe to lighten the load. You may want to start to bring in your stops to break even if you're treating this as a scalp position. If you're taking it more of a long-term stance, it's a different story. But intraday, that's what I'd be looking at. If we were to close the market right here, it would be constructive. Okay, you have an outside day reversal off of support as momentum is rebounding off 50. Those aspects, Raj, in my mind, near term would be constructive. Does that make sense? Raj says emphatic yes. All right. Yeah, you're more than welcome, Raj. Great to see you in the room as always, man. All right, so that's the British pound, and I think we'll get some play. Just keep in mind what we've been doing with the British pound for the last couple of weeks. It's been a chop fest. A lot of times, the best or the way to alleviate yourself, guys, from a headache is just, look where the market is offering clarity, and there's always clarity somewhere. We might fall in love with a pair on the Aussie, or over the years, I can tell you, just over the last 10, 11 years, Aussie dollar has been the most traded pair in my career by far. It just doesn't mean that I'm going to stick with it. If the clarity is somewhere else, I'll shift my attention somewhere else until this becomes a little bit more clear as far as what we're doing on the intraday. So keep that in mind. All right, so that is the British pound. Mark Haverman says, so Aussie yen might break down. You know who's looking at this? My colleague on Daily FX, David Song. Yeah, he's all about the Aussie yen lately. And, he was favoring the short side here as we came into 91.30 yesterday. But obviously, hindsight's 2020. We broke through on the close, and we're now testing that area of support. The area I was more inclined to look at, and I guess I talked to him about it yesterday, was right here at this confluence. So you're basically looking at a trendline support that dates back to the 2009 lows, okay, and then the 2012 lows. We tagged it again twice this year. We broke through, came back, checked it as resistance, it held, okay. Now that same trend line comes into play with a 38.2 basic retracement of the range and a sliding parallel for the formation we've been following off the highs. So that's an area of resistance I'd rather look for a more concrete ceiling. Let's say that, Mark. Oh yeah, Mark says, can you hold still for 1 second so I can take a screenshot? Sure. Let me size it for you. Hold on 1 sec. There you go. Go nuts. He says, got it. So that's an area of resistance of which I'd be a little bit more inclined to look for more concrete resistance. It doesn't necessarily make much sense to me to try to fight the Aussie yen rally here based on the fact that I think that the Aussie could possibly break higher, right? So even though, we're looking for the dollar yen short, which is yen strength, Aussie strength might outweigh that. So Mark, to open up the month, man, and again, here's the opening range for the month. I always like highlighting that in all my charts. It's a pretty wide range to open things up, and we'll see if we can find some resistance up there near 92.26, 92.27, that 38.2 confluence. Also, one thing I wanted to note is this just broke yesterday. Okay, so you had a multi-month trigger resistance that gave out as price was breaking through the previous week's highs. Near term, that's constructive for me. So I'd be looking for resistance near 92.26, support 91.30. Basically testing that right now. Let me take a look at this from a 30-minute standpoint, Mark, real quick on Aussie yen. I don't know if I've updated that chart yet. Oh, by the way, I put a report on this on Daily FX a couple weeks back. This is also one other thing you want to keep in mind. This is the weekly, okay, structure for Aussie yen. Same exact chart, same trend line, okay? But you're also looking at the 2011 stretch high, which has offered some pretty clear-cut support so far for the year. We haven't closed below it on a weekly standpoint. And the other thing I want to look at is momentum. It looked like we were getting a trigger break here as that trend line was giving out. Watch this momentum trigger. If we close the week back above it, this holds no meaning, and we'll delete it. And bottom line is you're holding 40 as support at the yearly lows. So, yeah, I'm concerned for sure, trying to maintain a short bias for the Aussie yen from down here. Here's what it looks like on the 30-minute. Yeah, it's basically going to be the same exact levels, guys. There's not much to work with here on the intraday. It's not too readily identifiable on the daily. There's that sliding parallel. Confluence with that 38.2. Still probably the level I'd be looking for. Listen, to get back on the short side, it either needs to be a break back below that median line that you see here in blue, which is this on the daily. More importantly, that last swing high from Friday, or last week's high, essentially, 91 is what would put me back on the bearish camp here for Aussie yen. Other than that, still think you can get some more upside here near term. Mark says, I'm also looking at the October 2014 low. Where does that come in? Sure, 91.75. Yeah. Yep. You kind of ran through that last night or yesterday, so I don't want to stress it too much because you actually closed above it, Mark. The close was 90, or the low was 91.75. Yesterday's close was 91.76 by a pip or so. We won't stress it, but I hear you. It's right there as well, right? Sure. He said I was going to say it didn't close above. It did, yeah, by a pip. I won't stress that, but we're on the right track. I think this is still going to be a little bit more of a key pivot, specifically with those highs that we made into late July. So I hope that helps on Aussie yen. We'll keep an eye on it. I'd still rather play it versus the dollar right now, and I'd still rather play dollar yen actually instead of Aussie yen. But it does look like to open up the month, you want to be watching that near-term resistance. A question from Bernard. Great to see you. Can you look at, euro dollar? Sure can. So euro dollar came into support earlier today. That level was 108, 45 is 618 retracement from the advance off of the yearly lows into those highs that we made here in May. We're still trading within that range. 108.18 is the stretch low from May. That's what this padded region is from. And you saw price drop right into that to open up the week. Here's what I'm looking at with the euro dollar. Look, I don't have anything intraday very compelling for the euro, which is why it wasn't featured on the intraday charts. We were following this perfectly last week until we broke here this week. Start off the week, obviously, we stay a little bit on the more neutral tone, especially to open up the month. This is what sealed the deal for me on this break, yesterday in trade. So this formation at this point holds no merits, right? We're out, we're done, sayonara. So where does that leave us here for the euro? Well, I'd say this. See consolidation break here in momentum. You got that momentum resistance trigger dating back to the May highs. You got the support trigger dating back to the yearly lows that you made in March. And we look for an initial opening range break here for the euro. I think is the only way I want to play this. Like I said, 108.45, 108.18 is a support structure that I would be looking for. I wouldn't really be looking for short exposure while above that. Unless you get back into the the median line parallel on the upper side, maybe that might be a more compelling trade. But near term, I got nothing here on the euro. It's very similar to what I'm looking at for the pound. I need to see a little bit more of a range play and then a break of that initial opening range to get going on the directional bias. You're pretty sheltered as far as euro data this week. The major player here is going to be the dollar, specifically with the NFPs on tap, but nothing too compelling here. On this one, Bernard, if we get back above 109.25, which was the initial opening range low, maybe that would be a nice indication that you look for another rally back into the upper median line parallel. But right now, you're just simply coming off support. I'd be really looking just at this daily chart. The only thing I'm really focused on here for the euro near term. Euro yen might be a nice play, Bernard. If you shift your attention to that, let's just save these charts real quick. This is something that Jamie's looking at. This looks interesting to me because it looks like, if my trend lines don't get all jacked up, it looks like we were breaking back below this structure here, okay? And if we do push below that median line once more, I'd be looking for a target down at those lows that we made last month. Momentum already gave us the trigger, although it wasn't really accompanied with a very conviction break in price. You see 200-day moving average here continuing to cap the advance. You see momentum failing to even hold above 50. And a downside break, you're looking at a target somewhere near the 100-day moving average, 134.20, and then, like I said, major key support down here is like 133.50, 133. So I think this one's a little bit more primed for the euro play if you're interested in trading the euro. Intraday, though, to start off the week, it's been kind of messy. This initially looked like an opening range break for me yesterday, and then we came right back into it before we even opened. Or last month, or before we even opened European trade, we came right back into it. So here's the weekly open now. We'll see if we can get any clarification as far as a near-term range here, but kind of seeing if that drifter to the downside will make a break of that trend line. Let me snap these for you. Hold on one sec. All right. So it could be primed. It could be ready to make a move here. You're testing support. I'd be more inclined, especially if this actually shows us a little bit more of a rebound, which momentum is at this point definitely suggesting that you want to respect that low. I'd be more inclined to use this as just a simple opening range, 136.40 high, 135 low. If we break the lows, we're bearish against the highs and vice versa. But I think the euro is going to be sort of a drifter here. A lot of people interested in it. And the more interest you see in such a pair, especially with such external factors, the ECB and all this event risk, and you're still seeing, Greek stock markets continue to sell off and whatnot, kind of let this noise settle out. I think you got a lot better options than some of the other crosses, specifically on the Aussie. All right. So hope that helps. Bernard says, thank you. Hey, you're more than welcome, Bernard. We'll take a look at the euro. I think you get a lot more clarity in the euro as the week gets deeper in the week. Euro Aussie is something I was looking at yesterday too. Major key support. I don't have any plays on this either, but I'm looking for 146.65 if we do get a pull lower. 38.2 retracement, basic median line support, the lows from that swing in July, the close highs for June. It's loaded. So this is a very nice interest for me, or a nice area of interest rather for me on the Aussie yen to open up the month. And that's just a bit lower from what yesterday's sell-off did. So another trade where if we do get down there, it'd be a very interesting break. If you do get the break, we'd definitely see a nice, concerted follow through, I think. Or on a rebound play for the scalps, you might have another nice topside target back into 148.20 or so. So interesting price action on the Euro Aus, Euro Yen, more so than Euro Dollar here to open up the month. All right. Kyle says dollar CAD. Vesk wants to look at dollar CAD. It seems there is a breakdown in dollar CAD from the record highs. So dollar CAD's another one we were following on the scalp charts or on the intraday charts last week with a lot of interest. And the pullback came into the first area of key support. If you guys remember, we literally caught this like to the pip, was 28.70 into 28.72. And basically, you're looking at the upper median line parallel. This is a formation, multi-year formation we've been following. Okay, break. A little messy on the upper median line parallel, but nonetheless, again, catching the lows here that we made in May. A breakthrough in July. Instant support here on the pullback, and then also constituted a basic 236. The deeper correction would have taken us into 127.70. That rebound there was all this thing needed to push into a new high. Above the median line, I'm not interested in playing it. Period. Pretty much end of conversation. So Hamed, who's also looking at dollar CAD, Vesk, Kyle, I'm not going to get caught on this one. I'm just not going to do it. If we get the outside reversal day today, which we haven't done yet, and we close back below the median line, sure. Look for near-term support at 130.70. And then this might be a more compelling target in such a scenario. Back down at 128.71 again. But it would jive well with what we're looking at if the dollar breaks down. And again, the CAD is not represented in this index, but certainly on a downside break for the dollar in general with the trigger break, that might be a situation where the dollar weakness in general might perpetuate a near-term reversal here in dollar CAD. Here's what it looks like on the 30-minute chart. So you can see I don't have any topside objectives beyond here. Here we are testing the median line again. This was the break last week that took us off a short bias. And that break back above the upper median line parallel, well, 60 break in momentum invalidated the momentum bearish signal as well. So too early to tell, guys. Too early to tell. And be careful trying to really try calling these highs and lows. Just coming from a guy who tried to do that a lot early in his career, it's just not not the best way to go about things. So look, if we get a break below 130.76, which is a nice support level anyway to start off the week, objectively, that's going to be a weekly opening range break. So in and of itself, that would give me a short side bias. Make sense? So the guy's looking at dollar CAD here. Vesk says, thanks, exclamation point, more than welcome, man. Great to see you in the room. And one other thing I do want to note, which is supporting the idea, Vesk and Kyle, that we might see a reversal here again, is that we are getting some momentum divergence. Just remember that divergence, this signal can go on for another 3 days before you actually get a move off it. So here's the high, higher high, higher high, higher high. You're getting lower highs in the momentum signature. This is sub 40. From a momentum standpoint, certainly does look like we're seeing the top side wane. From a price standpoint, let's just get below the weekly opening range to get this thing going. All right. And in such a scenario, I didn't want to do this until I did it in the webinar with you guys, but in such a scenario, that basic 236 that we tagged last week, you're going to want to tag that out to the new high now. Okay, and you get a nice pivot at that same 236 down near 29.60. So we'll see if we can get a little bit more clarity here on the dollar CAD. Initially here, if we do make an outside reversal today at resistance, it would start to bode well for a near-term pullback. Beyond here, just to cover both sides of the trade, guys, if we do break higher, 133.05 is a soft target. More importantly, I'd be looking for that key 618 retracement, 134.57. And that's the 618 retracement from the decline off the 2002 highs. This is actually your 2003 stretch opening range low at 133.05. So levels are there. Let's just get some momentum on this, get some Momo readings, see if we can get the reversal here with a push lower. Okay, Mike, you still think dollar yen short side, says Raj. It is rallying up. Let's take a quick look back at dollar yen. So as I already showed you, right, I'm already out of that. I got taken out. Oh, here it is, 2-pip profit on that rally basically back into entry. So I'm no longer holding a short on this. The majority or half of the trade got taken out right here on the stretch earlier, right before the webinar today, actually. Then you got that momentum break back above 30. I brought the stop down at break even or a 2-pip profit, whatever, and that got taken out. So don't mind what's happening on the intraday. This is what you need to look at. Okay, Raj? If it holds 30, 24.35, 24.36, even as high as last week's stretch high, I'm not looking to short this. If it breaks through that, man, there's really nothing in this until 25, 25.50. So I'm not going to want to be sitting in a short as this thing rallies into a new high. That being said, you're at resistance. You're at resistance right now as we speak. So if the opening range for the US session comes up, this thing gathers some pace, you see some highs being defended, and you break the low, well, that'd be another short trigger back to the downside. Does that make sense? Raj, are we on the same page with this? Also keep in mind on the intraday, guys, that's not a bearish momentum signature just yet. If this rally were to hold at 60 and then break 40, yeah, I'd be looking to sell rallies. This was a pretty nice trigger. Again, on the pullback, the 618 we just tracked, or the 50% we just tacked on here, we took out 50% of the trade. We're looking for about 17, 18 pips per scalp. Momentum came right into 40 and rebounded. So right now I'm looking for a resistance at 60, a 40 break in momentum, and an opening range break to the downside to get me back on the shorts. Otherwise, watch that major resistance there. And specifically, guys, on a close basis, it's always good just to bring the trade or the chart into a line chart and see what it looks like on the closes. And certainly we have not closed above that since early June still, okay, despite all the attempts that we've made. So just keep that in mind. Raj says, yes, more than welcome, sir. Okay, I think I've covered all the ones I want to. Ooh, let's go over Kiwi real quick. So Kiwi, we were all over this trade last week. And listen, it broke lower. It invalidated our bias. It gave us the trigger break, and we're no longer looking on the long side per se from a scalp standpoint. Again, this is the formation that we broke early in the week. Okay, yesterday, it invalidates the long side of the trade, so we'll take that out. This is a new formation I just tacked on last night. It looks like it could be providing some guidance. You see the median line there offering some support on yesterday's pullback. But again, I don't have a trade on this one unless we get through this region. Okay, it's going to be a break of the opening range high for the week and the upper median line parallel. On the short side, I do not have scalp targets. Okay, if you break 64.97, nice confluence at 64.12, but much wider range than a scalp per se. So, we're going to keep this one right alongside the euro and the sterling as on the radar sort of watch list until we open up the week here. Mark says daily close above 65.65 would be constructive. Yeah, I mean, I wouldn't even say that, Mark. I think you need to be very careful about what you treat as constructive within this really strong downtrend. This was sort of what turned us constructive. The break through the median line, then we closed and defended it as support right after momentum gave us a multi-month trigger break. That was constructive. Just so happens that we fizzled out right at the upper median line parallel, and here we are back below it again. So for me, I would need to see 66 before I get interested in playing the long side again. I really would. Again, the opening range high, as the daily chart shows, you also have the central monthly pivot, which again, I don't stress, but when it's there, coincides with basic trendline support, longer term moving averages, yada, yada. It adds more credence to that level. All right, he says, yeah, I just looked at the horizontal support and resistance. Okay. Yeah, Mark, just make sure we keep that in mind as far as those slopes are concerned. Love the enthusiasm, Mark. Always good to see you in the room, guys. All right, so I think I've gone through all of your questions, guys. Again, it's early in the week, it's early in the month. Things are going to stay light for a couple more days. We'll get some more price action under our belts, and we'll have a lot more setups as we get deeper into the month, deeper into the week. Watch those data prints. Again, I'm looking forward to that Aussie data. I think it's going to be great, especially right ahead of NFPs, to give us a little bit more of a tell what we're looking at with the dollar price action. But dollar yen, Aussie dollar, the main featured scalps that we'll be looking at. A real quick look, guys, just a couple of seconds on the com block. I did just want to point out the gold levels. Major key support still in play, 1072 into 1074. You're looking at 100% extension off of the highs. You're looking at a 2006 long-term trendline support, momentum at 30 on the weekly. Major key support here on a gold downside break. This thing could get really messy. 1044, 980 being initial downside targets. Major key resistance still up at 1145, 1150. The SPX is going to be a little bit more of a chop fest as well, but I just want to also highlight here 2088, a level we've been watching as a nice pivot in price, continuing to offer a floor here for that stock indice. The German 30 and some of those breaking resistance earlier today at 1152. Again, I think that could see a little bit more upside, more towards this region here. That takes you basically into 11730, 11738 on the upside in the DAX. Crude, last but not least, you saw the break of the lows to start off the month at 46.80. Listen, the low day close for the year comes in at 44.60. So I think it still could see a drop. I did want to point out the divergence you're seeing in momentum. And for me, a topside break back above this region, you'd be looking at that target again at that former lower median line parallel. But until we do, leave some room that this thing could still go for a check of the yearly low day close. All right, watch dollar price action on this one as well. If the dollar does break down, likely to see a little bit more of an upside rally here near term. We'll wrap things up. We'll pick things up tomorrow morning at 8:30 Eastern, same time, same channel. Again, hopefully we'll have a lot more setups in play, and I will give you an update later tonight on SB for the intraday levels. Guys, best of luck trading, and I will see you tomorrow. Don't forget, 1 p.m. Eastern today. Also, Jamie will be on board with his intraday, midweek strategy webinar at 1 p.m. Eastern. So make sure you guys catch that later this afternoon. All right. Cheers. See you guys tomorrow.